What do you think ultimately Turkey's currency crisis means for the rest of the world?
Well, Michelle, thanks. And Sarah did touch on most of the key issues that I and others are watching. I think the thing that is most worrisome about Turkey is not the cumulative decline in the currency, but the speed. And when you see an accelerating downfall like this, met with largely incremental actions by the central bank, then you have to worry about where this is going with respect to Turkey. The markets clearly want much more decisive action, and Erdogan is not about to do that, both in terms of policy as well as rhetoric.
Argentina got religion really fast. Interest rates went to 40%. Today they raised them to 45%. Is that what you're talking about? Does Turkey need to do something like that?
Yeah, Turkey needs a really large and strong monetary tightening. But you asked the question about contagion, and that's always tricky. But when you look at emerging markets today relative to 97, and again, Sarah touched on this, you do see more flexible currency regimes. You see a large buildup in foreign exchange reserves, which was not evident back then. You see more saving. You see lower inflation. In large part, you see, and Turkey's an exception, better current account position. So the case for contagion is not as compelling as it was back then, but this currency dynamic is worrisome.
When you see European banks, Stephen, selling off because of feared exposure to Turkey, could there be another mechanism, and not just through the emerging markets, but through the bank exposure right now, that could just worsen?
It's possible. I wouldn't rule that out. There is a lot of European banking exposure into Turkey. The one thing that actually worries me possibly the most in terms of potential contagion is just the unwinding of QE. QE created huge arbitrage into high-yielding emerging markets, and with QE now working the other way, the drain on excess liquidity is clearly problematic for those countries like Turkey and potentially others who were benefited dramatically from this arbitrage.
Right. Stephen, we're at a point. This one is different this time in that the leader of the country is not looking for help, not looking to stem the tide and the decline of the currency. He's hunkering down and telling his central bank, don't raise rates. I don't want you to do that. So they're, increasing liquidity, which is a stopgap measure to say the least. Is there a pain point at which the IMF can step in, or, what do you think happens down the road here?
Well, Bill, it's a good point. The pain threshold, I think, ultimately gets judged by the level of foreign exchange reserves that the country has to manage its currency, and Turkey still has apparently enough reserves to deal with these pressures for the time being. But as we saw and have seen in crises in years and decades past, those reserves can be depleted quickly. They're at 75 billion in terms of estimated foreign exchange reserves, and that's down somewhat, but not dramatically. And the IMF steps in when that number gets lower. Yeah.